Hello, everyone, and welcome back to another episode of Market Outlook series with me, Kavita Agrawal. Today, we are here to discuss about Nifty Bank Nifty and the intersector analysis. So, this week has been quite frustrating for short term traders, especially because the market has been a little range bound. So, we are going to look at the chart starting from the 3-minute time frame all the way to the daily time frame and see if there are any evidences which indicate about which direction the market is going to supposedly break out. So what you're looking at the chart is the 3-minute time frame, and before we get into the analysis, let's first see what has happened the entire week, right? So today was Friday, the market has closed. Now what we saw that from Monday onwards, basically there had been a pretty good rally which lasted around 300 points rally. Okay, and this rally went up to touch the resistance of 19,570, which had been posted to you on my Telegram channel as well as my Instagram account. Now, Nifty took almost exact resistance at 19,570 and then came down. The level of 19,350 had acted as a support sometime on Wednesday. However, today morning, that is Friday morning, the support gave away almost instantaneously, and we can see that the market basically gapped down below the support only to reach for the next best support available, which is the zone of 19,200 to 19,250. Now, in my opinion, these two levels of basically 19,200 and 19,600 are the most important support and resistance respectively, and as long as Nifty continues to be between them, it is going to be a little bit frustrating. Now we're looking at the 15-minute time frame, and as I can see on the 15-minute time frame, the phenomena of RSI range shift has already started unfolding. So if you're wondering what RSI range shift is, I have done a detailed video about that in my YouTube channel, so you can check it out. But to put it in short, RSI range shift is basically a phenomena where right before a trend reversal, RSI first changes its range. After 10 years of practice in technical analysis, I have realized that RSI basically has different range of oscillation for a bear market and a bull market, right? Now, because the trend identification changes across time frames, the lower level time frames like 3-minute and 15-minute RSI a lot more sensitive to price changes, and usually if a larger trend reversal is coming, then these smaller time frames give a range shift much earlier. So 3-minute and 15-minute have already started showing the positive range shift, and the reason why the positive range shift will also be more prominent in the 3 and 15-minute time frame is because on the 75 in the daily time frame, which I'm going to show you right now, the price correction has actually not been significant whatsoever, right? So on 15-minute, as we can see, there is a big positive divergence here, right? So positive divergences are actually and also negative divergence, they are the markers or the beginning phase, like they are the markers of the beginning of a range shift. So here, because the RSI has moved to a positive range shift, and you can see that here basically RSI was testing the level of around 70 when the market was still rallying and going up to 20,000, and after that the market started sliding, and within the sliding market, every peak that Nifty was making, the RSI was not really going above the level of 60 per se, except for the last peak that was formed with very good momentum. What this shows is that this upside that happened, the market momentum was very strong, and so even though it has been retraced 100%, the market momentum may continue to be positive. Now let's look at the 75-minute time frame, and here you can see all the white lines, which are those key support levels that I have marked on the chart. So basically, if the 19,200 level is breached, then in my opinion 19,050 is the next best support for the index. On the 75-minute time frame, what I can see is that the bull range has not really gone anywhere, because the price is just taking what is called a normal breather. Considering how strongly Nifty has rallied ever since it started to move up from the bottom of 28th March, this is basically a proper correction that Nifty's had since that rally started unfolding, and it was much needed. So on the 75-minute time frame, I don't think there is any warning sign. In fact, this correction was also indicated by the RSI negative divergence when the 20,000 peak was touched, right? So nothing abnormal here, and same goes for the daily and the weekly time frame also. They continue to look very bullish. So if you're a short term trader, like if you're doing intraday trading or options trading, then I don't have any advice for you except that don't do that. It's very, very risky and not a favorable landscape for retail traders to pursue. But if you're a swing trader like me, or if you're one of the Trade Together program subscribers, then I would like to tell you that don't worry about what you're seeing in the market. I believe the uptrend is going to resume, and as long as the support of 19,200 is intact, there is absolutely nothing to worry about here. Now let's move on to the chart of Bank Nifty. So Bank Nifty we had identified was looking very positive, and it also had a support of this 100 EMA on the daily time frame, which was giving good signals to us. And we also saw a small bounce back come in the Bank Nifty chart as well. But just like Nifty, Bank Nifty has also almost entirely retraced it. But the retracement in Bank Nifty has not been as bad as Nifty, because it has not retraced or forged a new low right now, which is actually quite positive, which means that the Bank Nifty is very, very positive. And when financials, banking stocks, when they are very positive, the market rallies, or basically the broad indices rally faster, because obviously they form a much bigger part of these broad market indices. So I'm just going to move this trend line here, and I'm going to clone one here, because I can see there is this kind of a zone kind of a thing forming, where every time the price kind of visits, it has a tendency to, spend a lot of time, give a lot of consolidation. So we can see that even from this zone, there was an attempted escape, but the market basically, got pulled back to it. So lately I've started using this term of, either magnetization or like gravity. So what happens is that when there are a lot of different reasons or lots of different supports, like trendline support or EMAs, or these channel zones or horizontal zones, they all tend to have a gravitational pull on the price. I am putting it very simply, but if you think about it scientifically, it makes sense, because if so many different indicators and tools and different drawings are showing a support zone, it becomes a self-fulfilling prophecy kind of, because people who might be using many different tools and indicators are looking at that same level and thinking, oh, it's a support, oh, it's a resistance. So the use or the effectiveness increases quite a bit, and that is what we're experiencing in this kind of a channel also here, right? So I am feeling quite bullish about the market, and even on Bank Nifty, I think as long as 43,720 remains intact, I would think that Bank Nifty has a pretty good reason, because see, the uptrend is still pretty solid on both 75-minute and the daily time frame also. So I would expect the level of 46,750 to be achieved pretty soon. My target on Nifty, which I forgot to mention, is also 20,600, which I expect to be achieved in the next leg of rally. So that's that. With this, we are done with the analysis of Bank Nifty. I've given you the levels, I've given you the analysis. Now let's move on to our intersector time frames, intersector relative chart. So all these squiggly lines that you're seeing, basically each line represents one sector, and you can also see on the axis that I have here the different name of the sectors and how they have performed compared to their opening price on Monday. So we can see the Nifty Private Bank has led this week with a rally of 1.5%, and CNX PSE, or the public sector enterprise sector, was right behind with a rally of 1.4%. I suppose that is because of the Chandrayaan landing and lots of positivity towards public sector enterprises. The IT stocks this week have done relatively well, which again makes sense because they are a bit of a contrarian bet, right? IT sector has a tendency to give good rallies on days when banks are kind of weaker or the broad market is kind of weak, so that makes sense. So we did see some negativity in the banks this week. So the Nifty Bank Nifty was up around 0.9%, but the PSU bank sector, you can see, lost around 1.3% this week. Pharma sector and healthcare sector have also given some correction this week, but the underlying momentum has been very, very strong in these sectors, and I expect that momentum to continue for some time. However, that being said, I would not recommend you to make a fresh position because, my friends, that boat has sailed. However, if you do want fresh positions, with an upside of anywhere between 20 to 40%, then I think chemical sector is a very, very good area to look into. In fact, majority of my active recommendations to members in the Trade Together program has been in the chemical sector right now, and I have some amazing picks. If you're interested in getting some more information on that, just follow this Telegram channel. Join this Telegram channel. All you have to do is type in EXP-Invest in your Telegram channel, and you'll automatically be taken to my original group for this. Okay, so with that, I have come to an end of this market outlook. I hope you liked it. I hope I was able to add some value to it. If you did, please don't forget to subscribe, like, and comment this. Also, share this video with your friends. I will see you again Tuesday in my Retail Traders special series. I go live every Tuesday and Thursday at 5 p.m. where I share my knowledge of technical analysis, stock market, how to do good swing trading, momentum trading. And just so you know, I focus only and only on equity market and only on swing trading. I don't care about options trading or derivative trading. The entire service that I'm giving in EXP-Invest is dedicated to helping people who are currently in a job or doing a business and want to successfully participate in the market with a variety of different services like consultation, portfolio cleanup, Trade Together program, and long-term investing plans. So if you want stock picks in stocks, if you want stock picks which are fundamentally sound and technically at the right point of time to enter, then the long-term subscription plan is for you. However, that is not publicly advertised. So if you want to join that, you need to get in touch with me. So with that, I have come to an end. Thank you so much for joining in. Namaste.